What's good everybody, welcome back to AZ Trading, long time no see, and in this video I'll be talking a bit more about Forex as opposed to indices, and I'll be explaining how you can use a closely correlated Forex pair to help you avoid losing trades. And these are both trades that I had in mind, however I'll be showing you guys how and why we managed to avoid these losing trades by using a correlated Forex pair. Oh, and yesterday was FOMC, so at the end of the video I'll be showing you guys some quick backtesting examples that also follow the RMR pattern. So here's an example on the NASDAQ, and here's a bullish example on the USDCAD. But first, let's get into the main topic of this video on how to avoid these losing trades. So we all know that the pattern we primarily use to find trades is the RMR pattern, where first we look for a raid. So if we look to the left, we have some relative equal lows. So when price breaks through that, that's the raid. And then after a bearish raid, we look for a bullish market structure shift. So we have some swing lows, swing highs, and as soon as swing highs start to be broken, so this swing high was violated, this would be called a bullish market structure shift. And then finally, the third thing we look for is the return area, and this is where we'll participate in the trade. And in order to find our return area, typically during this bullish market structure shift leg, there'll be a gap that's presented. So if we zoom in, we can see there's a little gap right over here. If I extend that one to the right, this is known as the return area. So when price retraces back into that area, that's where we can place our long. So let's say we've placed our long in there. In most cases, our stop loss will be at the bottom of the raid's low, which is over here, and then we can look for some partial objectives above. But as you can see, as the trade moved on, after around 20 minutes, our trade would have been stopped. So what prevented me from entering in this trade? There are two main reasons, and the first one is on this chart itself, and then the second reason will be on a correlated market. So the first reason, if we zoom out a little bit, I've just gone onto a 5-minute chart, and you can see that our raid below these two relative equal lows actually raided below multiple lows. However, if we're very zoomed in, sometimes a lot of key information can be left out. So if I just scroll back a few more times, is there anything interesting that you can see now? And if you're looking at what I'm looking at, you can see that these two lows over here, they look very, very clean. We know that under equal lows, there's plenty of liquidity resting there, sell side liquidity. So even though that there's liquidity down below these lows, there's also more money down here. If we didn't have this area in mind, these equal lows, we would have no idea why we'd get stopped out. But you can see, just zooming out a little bit, finding another set of equal lows under the trade, this would be a pretty big reason to avoid getting into this bullish trade, since this area of liquidity is just too close and too much of a likely objective. And the second reason why I avoided this trade, if we have a look at a correlated market with GU, we know that GJ has similar tendencies, and I'm on GJ now on the 30-minute time frame, and you can see we have some higher time frame relative equal lows over here. So at the time of the entry, around 9:54, here on GJ at 9:54, you can see that those relative equal lows have been left untouched. They haven't been reached yet, they haven't been raided, which means that price will keep this area in mind as a likely objective. So if GJ is likely to be bearish, then of course we don't want to be placing a bullish trade on GU, since they are a correlated Forex pair. I'll just show you guys some screenshots that I've prepared. I put these ones in my journal just to outline my thoughts. And so here's that GU trade, and here would have been the time of the entry as it's returning into the 1-minute gap. And I've labeled it, is it time for a bullish reversal? Should I take this long RMR trade? F no, check GJ. And then I took a screenshot of GJ of these relative equal lows that we're very close to but haven't raided, meaning that GJ is more likely to continue dumping. So this would prompt me to avoid that bullish GU trade. And here's just a little progress picture of the trade failing, and here's the picture of GJ finally reaching those equal lows. So that's the first example, guys, and I'll go on to the second example of how to use a correlated market. And once again, I've prepared some screenshots, and so this trade is on GJ. Just a quick note on correlated markets, guys. If you use a correlated market in any kind and you find these opposing objectives, this could be a powerful tool to help you avoid losing trades. But also if you reverse it, instead of having an opposing objective, if you had very similar objectives on correlated markets, this could be a reason that increases the likelihood of your trade and can increase your confidence in the setup. So long story short, correlated markets, good to help you avoid trades, but also really good to help you find high probability trades. Alright, so in this GJ trade, same pattern we use the RMR pattern. We had these relative equal lows over here that we outlined, and this is the raid. Then we look for a market structure shift. So we're being bearish, and then, oh, we've broken a swing high. So this is what we'd call the market structure shift. And like we did before, during the market structure shift, a gap will usually present itself, and this will be our return area. So when price retraces into that area, that's where we place our order. with our stop loss at the bottom of the raid down here. And once again, you can see that in less than 10 minutes, we would have been stopped out. But once again, how would we be able to avoid this losing trade? So at the time of our entry at 1140, so markets that are correlated with GJ are the other yen pairs, so EJ, UJ, CJ, etc. So we'll just go to the main ones. So we'll go to UJ, and at the time of our entry at 1140 over here, if I scroll back a little bit, we can see some relative equal lows resting under. Once again, lots of liquidity down here. It's a likely objective. So if UJ is likely to be bearish, then on our GJ trade, we want to avoid being bullish, since those are conflicting ideas. And you can see that on the FOMC release, those equal lows were taken very promptly. So this is one correlated market to advise you against your bullish trade on GJ, but I'll go on to CJ as well. And once again, at the time of our entry at 1140, if you look to the left on a higher time frame chart, once again, you can see we have some higher time frame equal lows that have formed, which means there's plenty of liquidity down here. Price sees this as a more likely objective. So if CJ is likely to be bearish, UJ is likely to be bearish, then our bullish trade on GJ is likely to fail. So no matter how clean your RMR setup is, if there are so many conflicting objectives below that are going in the opposite of your trade direction, then that is a very strong sign that this is a trade setup that you should avoid. I'm not saying that the RMR is trash. I'm just saying that this scenario where you've decided to use the RMR was not the right time. Because once you get good at using a strategy, you'll start to see it form everywhere. And then it becomes not a problem of where to find the RMR, but more so when to use the RMR pattern and when not to use the RMR pattern. And using those correlated markets like I showed you can be a very good indicator of that. Once again guys, this was a trade that I was looking at, but decided against it, and here are my journal inputs. So here's the first screenshot of where the entry would have been at around 1140, and I've written a note here saying once again, why avoid? It's a clean bullish RMR pattern, so why would I avoid it? And then I mentioned to check UJ and CJ. And so here are my other screenshots. UJ, we have these relative equal lows, and then on CJ also these higher time frame equal lows. And that's how I use correlating markets to help me avoid these two losing trades. I don't want this video to be too long, so I'll just give a very quick backtest example of the RMR pattern. So here on the NASDAQ, we have this initial raid, and then we wait for a swing low to break. So over here, we break a swing low. This would be the market structure shift. And during that shift, we usually have a gap that's been presented, which will be a return area. And as price retraces back into that return area, that's where you can place your entry. With your stop at the raid's high and objectives below, you can see that this would have been a monster trade using the RMR pattern. And what objective would you have been aiming for? If we scroll out on a 1 hour chart, we have a relative equal low here, another low here, resting underneath. You get the point. Liquidity, it's a likely objective, and you can see that price reached that area very, very swiftly. Alright guys, one more final example so I don't keep you guys waiting too long, but we're here on the USDCAD, and once again, as price dumps through, this is what we can call the raid. Next thing is the market structure shift, so it breaks a swing high, and this is the shift leg, and during that shift we have a gap that's been presented, and as price retraces into that gap, that's our return area, so that's where we can place our long. And once you've placed your long, have your stop at the bottom of the raid and objectives above. We can aim for these equal highs here, and then there are just a few more swing highs to aim for afterwards. I won't be doing an entire separate video on these trades since I wasn't able to capture them on TradingView. So that bearish trade on the NASDAQ I didn't manage to capture. However, this bullish trade on the USDCAD, I've just got a screenshot here from my broker, and you can see that we have some entries at that return area, as well as exits at equal highs and different swing highs. Usually I can always find time to place a separate entry on TradingView so I can show my executions and all that, but in this case it was FOMC. I was a bit tunnel visioned on my trading, so I couldn't give you guys those TradingView executions that I know you love. But that'll be it for this video guys. I hope you all enjoyed or learned something new. If you did, leave a like and subscribe. It makes me very happy. And if you've got any questions, leave them down below. I'll get back to every single one of you. But until next time, take care everyone. Peace.